In my first years of trading, I used to change strategies almost every day. I didn't have a trading plan. If I saw a signal, I took it, until I realized that when it comes to technical trading, my job was to seek out only the high probability entries. Today I'll show you an effective strategy to increase the odds on your trades using VWAP and the simplest price pattern you could find, the V-top and V-bottom formation. You know the drill. Like, subscribe, and stick around for the full video. The V-bottom appears when price momentum switches from aggressive selling to aggressive buying. This is a powerful bullish reversal pattern. Because of the nature of the aggressive buying that takes place when a market reverses direction, it can be intimidating to enter after the market increased already quite a bit. This market shows a picture-perfect V-bottom at the end of a bearish trend. Price traded lower into a bottom and immediately reversed higher, with a massive increase in momentum. Now let's be clear, it's nearly impossible to predict V-bottoms, so we won't try to anticipate this swing low. We'll wait for price to break the neckline of the pattern, meaning the previous swing high before the bottom. This is basically an interruption in the previous downtrend. And then we plan to enter a long position once price retests the neckline, but with several confirmations. We'll talk about them in a few moments. The V-top pattern appears when price momentum switches from aggressive buying to aggressive selling. This is a bearish reversal pattern. In a V-top, price traded higher and reversed lower, with a massive increase in momentum. There are many ways to trade the V-top, but the most conservative way will be to wait for a break and close below the neckline, and to attempt a short once price pulls back to the neckline and gets rejected. Trading V-tops and bottoms can be difficult because you'll recognize the pattern once price breaks above or below the neckline. And another problem is the fact you'll see this setup many times throughout the day. I filter these signals using VWAP because on the VWAP line, you won't see changes in the length or the time frame, unlike moving averages. VWAP eliminates the confusion regarding time frames and settings. It doesn't matter if you're using a 1-minute chart or an hourly chart. There is only one VWAP line. Flipping between time frames won't affect VWAP's position. VWAP acts like a magnet, either attracting or repelling. For this strategy, we'll use anchored VWAP. Anchored VWAP will tell you the price at which most traders are commonly positioned. We'll apply it on the lowest low of a V-bottom formation and on the highest high of a V-top formation. By anchoring VWAP to these exact price locations, you'll find dynamic resistance and support levels. For a long signal, market forms a V-bottom formation. The V-bottom should be at a new low point in the market. You can't trade the formation if there are recent lows below it. After you identified the V-bottom, you anchor the VWAP on the recent lowest low. If the neckline, the static support, aligns with the anchored VWAP, acting as a dynamic support, you buy at the retest of the neckline. For a short signal, market forms a V-top formation. The V-top should be at a new high in the market, so you can't trade the formation if there are recent highs above it. After you found the V-top, you anchor the VWAP on the recent highest high. If the retest of the neckline, the static resistance, aligns with the anchored VWAP as dynamic resistance, you look to sell the retest of the neckline. We are trading crude oil on the 4-hour time frame. Price dropped into this low but reversed, with momentum increasing on the way higher. Observe that this is a valid V bottom because price made a new recent low. When you start seeing an increase in buying pressure, observing the price action by using different time frames can be very helpful. So let's move to the 30-minute time frame. The neckline of the pattern is evident now. The conservative way to trade would be to wait for a break and close above the neckline, and to attempt a long position once price pulls back to the neckline and gets rejected. We have the breakout above the neckline, so let's add the anchored VWAP at the lowest low of the formation. Now we just wait for a rejection of the anchored VWAP and the neckline. Stop loss goes below VWAP, and my target is the next swing high in the price structure. The minimum risk to reward ratio should be at least 2. Another target can be set above the neckline, equal to the distance measured from the low of the pattern to the neckline high. We trade Apple on the hourly time frame. I spot a V bottom here. Price made a new low and momentum switched to the upside. Let's move to a lower time frame to time our entry. Here's the neckline. We'll wait for price to break this level and then enter a long position once price retests this area. But before that, we anchor the VWAP to find the confluence zone. Here's the signal. I see a rejection of the breakout area and at the same time a rejection of the VWAP. Stop loss below the VWAP line, and we target this swing high in the price structure, a risk to reward ratio of around 4. Now that price consolidated above this swing high, we remove the risk from our trade by moving our stop to break even. Let's trade a V-top formation, pound dollar, 4-hour time frame. Price traded higher and reversed with an obvious increase in momentum. Like I said before, it's nearly impossible to predict V-tops, and we'll wait for price to break the neckline of the pattern. Now let's anchor the VWAP to find our dynamic resistance area. Here's the signal. We have a pin bar rejecting the VWAP at the retest of the breakout. 3 factors indicating a possible down move. Stop loss above the VWAP and above the high of the pin bar. Our target is this major swing low. If price breaks this minor swing low, I'll move my stop to break even. Okay, now we are in a risk-free trade. The main problem will be the fact that you'll probably see many signals. Even with the breakout area and the VWAP confluence, you'll have problems identifying the best signals to trade, especially if you are in your first years of trading. So my advice is to add another filter, just to make sure your setup is indeed worth trading. My additional filter is the central pivot point. I want the pivot to offer an additional layer of confluence. In this example, we see a steep decline, followed by a rally to reach the top of the pattern. The neckline would be here, the first area of static support. After the breakout, we add the VWAP line, this time dynamic support. We also add the daily central pivot point, the third area of support. I also see this downward trend line, which was also broken. This is our fourth level of support. Now let's move to a lower time frame to pinpoint the entry. Here's our signal, a pin bar rejecting the previous levels. This is our fifth indication that the market wants to go higher. Stop loss placement below VWAP and below the central pivot point, and we target this swing high, a risk to reward ratio of around 3. As price broke this swing, we remove the risk from the trade, and we move our stop to our entry point. We are looking at Exxon Mobile on the 30-minute time frame. Price was in an uptrend, made the last push higher above the previous swing high, but immediately reversed lower. This looks like a liquidity clearout, with many orders above this area. After price closed below the neckline, we need to wait for a pullback to the initial breakout zone. That's the first resistance level. We add the anchored VWAP from the highest high of the V-top formation. That's our dynamic resistance, the second component. We add the daily central pivot, which aligns with our previous resistance levels. That's the third layer. I also see this major trend line, broken to the downside, now could potentially act as a resistance. 4 different elements which indicate a further price decrease. This candlestick with a long wick rejecting our area of interest is the signal to short the market. I like to see either a pin bar or a candlestick with an evident wick or an engulfing bar forming at a VWAP pivot point area. Stop loss is placed above the VWAP line and above the pivot level, and we'll take our profit at the next major swing low in the price structure, which represents a risk to reward ratio of 6. As we broke this swing low, now is the perfect time to move the stop to break even. Again, price makes a last push higher above the previous swing high and reversed lower, which is another possible liquidity clearout. Price closed below the neckline, which is the first resistance level. We anchor the VWAP from this high. That's our second resistance. We add the daily central pivot point, which is resistance number 3. We also see a pin bar candlestick with a long wick rejecting the value area, and this is the signal to sell. Stop loss above the VWAP line. Take profit as usual, either at a major swing in the price structure, or you set a fixed risk to reward ratio. If you found value and learned something new, leave us a like. This way we'll know if you'd like to see more videos like this one. And check out our Academy program if you want to further level up your trading. Until next time.